Hold on to your seats, investors, because we're about to make a bold prediction that might just rock your world. By the end of 2024, at least one of the AI stocks we're covering today will see a staggering 200% growth, even if we enter a recession. That's right, we said 200%. This isn't just wishful thinking, it's based on deep analysis of market trends, key stock indicators, AI advancements, and the unique positions these companies hold. Stay tuned, because missing out on this information could cost you the investment opportunity of a lifetime. When economic storm clouds gather, many investors instinctively retreat to the sidelines. But what if we told you that recessions could actually present golden opportunities for savvy investors? It's true. And today we're going to explore why some artificial intelligence AI stocks aren't just weathering economic downturns, they're thriving through them.
I think a recession is baked in the cake given these money supply contractions that we're experiencing now. Because remember, the lag you have between big changes in the money supply and changes in economic activity, you've got a window of about 6 to 18 months, Michelle. And what do we have? July of last year, we had the peak in the money supply. It's falling ever since then. We're kind of in the zone right now where we could see some significant softening start, and I think we'll be really into it by the first quarter of next year.
Before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Let's dive into our 2 recession-proof AI stocks that could potentially supercharge your portfolio even in challenging times. First up is the tech titan Microsoft, ticker MSFT. Now, you might be wondering, how can such a massive company be recession-proof? Well, let's take a trip down memory lane to the Great Recession of 2007 to 2009. During that economic meltdown, something remarkable happened with Microsoft's financials. While many companies were struggling to keep their heads above water, Microsoft's revenue actually increased during most quarters of the recession compared to pre-recession levels. Even more impressively, their profitability remained relatively stable. Sure, they hit a small bump towards the end of the recession in June 2009, but boy, did they bounce back. Just 6 months later, Microsoft reported a staggering $19 billion in sales and $6.7 billion in profit for the second quarter of their 2010 fiscal year. This resilience isn't a fluke. It's a testament to Microsoft's relentless pursuit of innovation and diversification. Once known primarily for PC software, Microsoft has evolved into a multifaceted tech powerhouse. Today, their fingers are in many pies: cloud computing, gaming, social media, and of course, artificial intelligence. For investors, this means Microsoft offers a unique blend of stability and growth potential, and that's where key indicators like the 50-day and 200-day EMA come in. Watching for crossovers between these EMAs can help identify strong trends and possible entry points, especially if the 50-day EMA crosses above the 200-day EMA, signaling a long-term bullish trend. Speaking of AI, Microsoft's partnership with OpenAI and the integration of ChatGPT into their products has positioned them at the forefront of the AI revolution. Their cloud platform, Azure, is becoming increasingly popular for AI and machine learning applications, providing a steady stream of revenue even in uncertain times. Let's dive deeper into Microsoft's AI strategy. The company isn't just integrating AI into existing products, they're reimagining entire workflows. But how can you track Microsoft's momentum? This is where the MACD, moving average convergence divergence, comes in handy. When the MACD line crosses above the signal line, it suggests bullish momentum is building, confirming positive trends in Microsoft's growth. In the realm of enterprise solutions, Microsoft's AI-powered tools are helping businesses optimize operations, predict maintenance needs, and even forecast customer demand. But to avoid buying into an overhyped stock, check the RSI, Relative Strength Index. If Microsoft's RSI climbs above 70, it might indicate the stock is overbought. Waiting for the RSI to drop back to 50-60 could be a better entry point. Microsoft's gaming division, often overlooked by investors, is another area where AI is making waves, and the company is using AI AI to enhance game development, improve player experiences, and even create more realistic non-player characters, NPCs, in games. With the gaming industry often proving resilient during recessions as people seek affordable entertainment, this could be another buffer against economic turbulence. For investors, volume analysis is another tool that shouldn't be ignored. Increasing volume on upward price movements is a great sign of strong investor interest. If volume declines while the price rises, it could indicate a lack of strength behind the move, signaling caution. But before we dive into our next recession-proof AI stock, here's a quick question to get your investment gears turning. What's one unconventional metric you use to gauge a stock's potential that most investors overlook? Drop your secret formula in the comments below. Let's see who's got the most intriguing approach to stock analysis. Next on our list is CrowdStrike, ticker CRWD, a name that might surprise some of you. After all, how can a high-growth stock be considered recession-proof? The answer lies in what CrowdStrike actually does. But don't just take our word for it, use the Bollinger Bands to assess volatility. If CrowdStrike's price touches or moves outside the lower band, it could signal a buying opportunity. Conversely, if the price breaks above the upper band with increasing volume, it may be a sign of strong upward momentum. In the world of investing, it's crucial to distinguish between products people want and products people need. CrowdStrike's cybersecurity services fall firmly into the need category. Think about it. In an increasingly digital world, can any business afford to skimp on data protection, identity security, or network defense, even during an economic downturn? The answer is a resounding no. RSI can also be key here. When CrowdStrike's RSI dips below 30, the stock is considered oversold, and this may present a great buying opportunity, especially if the fundamentals remain strong. CrowdStrike's Falcon platform, a cloud-native solution that leverages AI and machine learning to detect and prevent threats in real time, creates a formidable moat against competitors. By watching support and resistance levels, you can establish smart entry and exit points. If CrowdStrike holds above its key support levels, it signals strength, making it a good candidate for a buy. For investors, CrowdStrike's subscription-based model is particularly attractive. In their most recent quarter, subscription revenue accounted for 94% of their total revenue. This predictable, recurring revenue stream provides stability and visibility into future earnings, a valuable trait during economic uncertainties. The graph highlights the strength of both Microsoft and CrowdStrike, showcasing their potential to withstand market volatility. Microsoft, with its massive market capitalization and a solid dividend yield of 0.7%, stands out as a stable, established player while delivering an impressive EPS of $11.80. On the other hand, CrowdStrike, though not offering a dividend, shines with a higher gross margin of 75.27% and consistent revenue growth, positioning itself as a leading force in cybersecurity. Together, these stocks provide a balance between security and growth potential, making them strong candidates for investors seeking to weather uncertain markets while still capitalizing on the evolving AI and cybersecurity landscapes. As we wrap up our discussion on these two recession-proof AI stocks, it's important to remember that no investment is without risk. While Microsoft and CrowdStrike have shown resilience in past economic downturns and are well positioned in the growing AI and cybersecurity markets, they're not immune to market volatility or sector-specific challenges. Diversification remains key to building a resilient portfolio. These stocks could form part of a well-rounded investment strategy, but they shouldn't be your only holdings. Consider balancing them with investments in other sectors, as well as bonds and other asset classes, depending on your risk tolerance and financial goals. Before we wrap up, here's one last question to spark some debate. If you had to bet your entire portfolio on either AI stocks or renewable energy stocks for the next decade, which would you choose and why? Share your predictions in the comments, and don't hold back on those bold market forecasts. Remember, while these stocks show promise, it's crucial to do your own research and consider your personal financial situation and risk tolerance before making any investment decisions. And the stock market can be unpredictable, and past performance doesn't guarantee future results. If you found value in this analysis, please support our channel by liking this video and subscribing for more insights into the world of investing and personal finance. Remember, this video is for informational purposes only and does not constitute financial advice. Always consult with a qualified financial advisor before making investment decisions. Thanks for watching Simple Investing Secrets, and we'll see you in the next video.